Hello and welcome to a special show on the numbers flashing on your screen. The April to June GDP growth has come in at whopping 7.8% versus 6.5%. Remember, the best of the expectations we had seen were around 7%, but it has surpassed the expectations for now. 7.8% is the number for April to June GDP. If you talk about GVA growth, that is 7.6%, and agriculture sector growth is also out, that is at 3.7%. To discuss these GDP numbers, we have with us Indranil Pann and Jayesh Mehta. Indranil, I want to come to you first. 7.8%, much above expectations?
I think, as you rightly said, the best expectations that we had seen was
supposed to be a little lower. But yeah, it is good. But with the current situation, no good news gonna give you any much immediate flip.
Right, Jayesh, we heard you. And Indranil, I want to come to you regarding your first reaction on the very basic number of 7.8%, and it is much higher even by the RBI projections. What is your assessment?
well, it is definitely higher, but I think if I heard Jayesh correctly, he also did mention that this number from a forward-going perspective may not hold much advantage, given that these numbers are not inclusive of the tariff hit that India is likely to be seeing. First reactions, agriculture is positive, that's at 3.7%. That would be, in my expectation, should be able to support rural consumption demand. I still don't know about the internals, especially the manufacturing sector and the services sector growth. And more important from my perspective would be an understanding as to how the overall expenditure side has done in the first quarter.
All right, Indranil, for the benefit of our viewers, I will once again repeat the numbers. The April to June GDP growth has come in at whopping 7.8%. Talking about internals, agriculture sector growth is at 3.7%, mining sector at minus 3.1%. And if you talk about manufacturing sector growth, which Indranil was discussing, it has come in at 7.7%. Similarly, construction sector growth is at 7.6%. The services sector growth has come in at a whopping 9.3%, and private consumption growth is at 7%. I want to get your take, Jayesh, first on the manufacturing sector growth at 7.7%.
So as Indranil also said, this is definitely looking much good than what it was projected. But then I think more than manufacturing, it's the government capex spend, the government spend, which we really saw in the first quarter and the second quarter. I think year to date, that is what is really more than anything else. Last year, we really didn't have much capex because of the government spend, because of the election and other stuff, right? So I think from that perspective, we have seen the growth, we have seen the momentum, and I think we are seeing, of course, there are economists and all that are talking about some demand slowdown. But this quarter, it has done pretty well from the government spending situation.
Right. Indranil, I want to come to you next. This is Anjali. I want to get your thoughts on the services sector, which has seen the healthiest growth at 9.8%. What are your thoughts on that?
I think, yes, our expectation of the services sector was at a 7.3, 7.4%. Because we were seeing some signs of slowdown also in the construction sector. From a banking perspective, credit growth as well as deposit growth were on the lower side. So services sector is a bit of a surprise, and this is one of the very critical elements that is likely to have sort of created this whole divergence, the significant divergence between what the market was expecting and what actually came out in terms of the numbers. Apart from services, I think for us, manufacturing also was a bit on the higher side because we were possibly taking a 5.5 to a 5.6% growth in the manufacturing sector. So that has, for us, also significantly surprised on the higher side.
Right. Just to put into perspective, once again, the 7.8% figures of GDP growth is highest in 5 quarters. And also, I want to ask to you, Jayesh, will it allow Reserve Bank of India to have some headroom for revision in GDP growth projections, because many of the economists were projecting that this year's GDP growth may be 6 to 6.4% and some even below 6%. What is your assessment now?
No, so of course, this is on the higher side. People are talking about revising it downward. And from that perspective, I don't really see, based on just this GDP number, any impact of changes for the RBI's own forecast, which will come in October. I think, of course, RBI forecast will change as to how we see the tariff situation moving. And October, we still have the whole 1 month before the next RBI forecast comes in. But particularly answering your question, will this number have any effect on their forecast change? The answer is no, because irrespective of this tariff situation also, while this number has come up, but there is an expectation, the second half may be much lower than what it was in the first half.
All right. 10 years bond deals did spike as soon as the GDP numbers were out. We'll discuss all this in detail. Gentlemen, stay on with us. We'll come back just after a short break. Welcome back after the break on a special discussion on stellar GDP numbers. 5 quarters high figure of 7.8%, and I have with me Jayesh Mehta as well as Indranil Pann. Before the break, we were discussing about the bond yield spike. Jayesh, I want to understand with you, how do you see the bond yield direction now?
I think right now people were expecting some, after the two cuts, joint cuts, and then neutral stance, people kind of gave up hope on further rate cut. And though after that, governor did specify that neutral does not mean no rate cut. And then there was some consensus getting built up. But now what's happening, particularly with the US and the US growth also coming very strong. As you just mentioned before we went to break, here also seeing the strong GDP number, that kind of diminishes the growth, the rate cut expectation. But more right now at this juncture is more than local. It's the global situation, which is keeping the yield elevated. 1-2 basis point on this GDP number and all that, it does not really matter. But the larger picture is it is kind of elevated mainly because of the US and what happens on the US rates and the tariff. So that's where the jittery is there, and that's why you see elevated bond yield level.
And Indranil, with the GDP number coming in higher than expected, would it mean that there would be some revisions on your end for the rest of the quarters and for the whole year in terms of the GDP growth forecasts?
Very honestly, I don't think immediately I will be wanting to do that. Though the significant deviation from our own numbers possibly will sort of poke me into doing that. Having said, I think we would sort of need to watch out the implication of the tariff, how it plays out. So part one, there is a headline sort of implication of the tariff, but part two, that there can be job losses in most of the sectors, because most of our exports to the US are labor intensive exports, which includes textiles, gems and jewelries, etc. So there could be a negative reaction on the domestic consumption side also, apart from the loss of the exports, which will negatively affect our GDP numbers. On the other side, we will have a positive in terms of the restructuring of the GST, which is expected to be positive for the consumption. So somewhere we need to take into cognizance the pulls and the on the either side on the GDP number. immediately we may not be changing our GDP numbers for the full year.
Right. Jayesh, I want to understand with you now what will our Reserve Bank of India will be doing because the pedal on the growth was already there. We have seen already 50 basis point cut which was there in last to last policy. How do you think this kind of GDP numbers, which is better than the projections of Reserve Bank of India, will help the central bank in the next monetary policy?
No, in fact, it's unfortunately it's the other way around, right? If the growth would not have been robust, it would have given them impetus to cut rate further. But at this juncture, as I said, standalone, this number would have been good, and it could have its pluses and minuses. But as of right now, even this number being so good or stuff, it is overshadowed by the U.S. tariff situation. I think any small good news, bad news right now is all overshadowed by the U.S. Tariff situation.
Right. Let me also welcome Radhika Rao to this discussion. Radhika, we are discussing 5-quarter high number of 7.8% in terms of GDP. Now, what are you expecting Reserve Bank of India to do in the next policy? As Jayesh was also mentioning that it will be a kind of dilemma because the growth has come in at higher than the expectations or projections. But if you see the second half of the year, of course, the risk remains.
Hi, certainly, I think it does. I think that's why you've seen the bond market behave the way it did as soon as the GDP numbers came out. I think there was a lingering expectation that when the RBI met last, there was only that 25% tariff that had been announced, and the other one was still in unspecified category. Subsequent to that, you've had the other 25% announcement on the tariff rate. So there was an anticipation that that would seem risky enough for the central bank to go ahead and cut rates. But if we have a 7.8% growth number, that kind of flies in the face of any slowdown risks. And even there was an anticipation that they would revise down their growth forecast. Now, I don't think that's likely. In fact, market might revise up the growth forecast. So it does throw into question whether they will need to cut more. But that said, I think if they do think that because part of this 7.8 number is also impacted by deflator numbers, especially on the service segment and a few other segments as well. So if they do bring out that point that it is kind of inflated, it is not picking up what is the actual momentum, and there are sufficient risks ahead. If that's how the narrative goes, then I think there is room for at least one or two more cuts. At this time in our baseline, even ahead of this GDP number, we didn't have any more cuts. And after this outcome, I think I'm tending towards keeping it on hold and see if the governor has any comments between now and when the central bank meets next. And the final point on the currency, of course, the currency is also weakened a fair bit. It's above 80. It closed, dollar rupee closed above 88 today. So a lot of currency weakness, whether we want to cut rates more in the face of it, is another thing that the central bank might look at as well.
Right. Thanks, Radhika, Indranil, and Jayesh for joining us at this hour and sharing your views and helping us decode the GDP numbers.